So how do you reduce taxable income with a side business? In today's video, I'm going to show you the magic of self-employment income combined with tax planning that can help you make a bunch of money, keep that money, and help it to grow into a huge number and not pay taxes, maybe ever, or if you're going to pay taxes at all, pay them many, many years in the future, which you can only do as a self-employed business person. So let's get right into it. So the first thing to know is that when you have a business, you have a lot more flexibility. You have the ability to essentially split income between benefits, which may not be taxable or not taxable until later in time, versus money that you receive today. And you typically can't do that as an employee. Matter of fact, very few employees, unless you're at the upper echelons like the CEO or C-suite level, you can't do anything even remotely like this. So for example, one of the things that you can do to reduce your taxable income or reduce your taxes is when you're self-employed and have, say, an S corporation or an LLC, you can pay your health insurance for yourself and your family, and it's tax deductible. Now, I have my own business and I pay almost $4,000 a month for health insurance. It costs a fortune, $48,000 per year. And I can pay that with pre-tax income. So I'm paying that essentially right off the top. So instead of getting taxed at, say, 30, 35%, instead I pay that money and I'm never taxed on it. And that's one of the things that you can do as a person with a side business. You can deduct the cost of your healthcare insurance, and it's expensive for everybody. Now I have a very platinum gold-plated kind of plan, but no matter what plan you have, they're all expensive. And so this is a great opportunity for you to take whatever you pay, for me $48,000 a year for health insurance, and I pay that with pre-tax dollars. So it's effectively about a third cheaper than it would otherwise be, and that's really good. I'll save a third all day. That's about $12,000 a year, which is fantastic. That stays in my pocket where it belongs instead of going to the government. So that's number one. The second thing you can do is a SEP-IRA. Now, at the SEP-IRA, you can contribute up to $69,000 per year or 25% of your income, whichever is less. And the IRA is not going to be taxed until later when you take your withdrawals. And the real trick to this is that, say you put away the full balance, you put away $69,000 and you invest it and invest it well, even if you do very conservative investments, and say you're getting 5 or 6% per year. Well, you're getting 5 or 6% on that full $69,000. Instead of, if you had $69,000 and then it was taxed and you lost, say, a third of it, you'd have somewhere around $55,000 to work with. And the interest on $55,000 is much less than the interest on $69,000. And if that goes on year after year after year, then your investment income that is generating capital gains, that's generating interest, well, you're working from a bigger basis. And when you have more money to start with, at the end, you end up with a lot more money, especially when you take into account the compounding effect. So when you can put those pre-tax dollars away, it is very powerful over time. And then, of course, later on, you're going to pay the taxes, but later is better than now. And if you're far from retirement, you may have that money working for you for 10, 20, 30 years, and that's going to add up to a whole lot of money. So that is a fantastic trick, the SEP-IRA. And that, of course, isn't available if you're an employee. If you're an employee, you have a much smaller amount that you're able to work with and able to contribute. Really, it's so small, it's not enough to build a retirement. So having a side business where you're making some good money, you can put away, up to $69,000 per year, can really, really, hotwire your retirement and give it some turbo boost. You can also do something called a solo 401k as a business owner. The solo 401k allows you to put away up to $69,000 per year if you're under 50, or get this, $79,500 per year if you're over 50. And this is on top of the SEP-IRA that I talked about. Imagine you're able to put another $70,000 for round figures away each year prior to paying taxes on it. And if you add that on to your other one, you basically have $140,000 that you could be putting away pre-tax. And imagine how fast your retirement could grow if that kind of money is sitting well invested in the stock market or gold or whatever it is that you like to invest in. Imagine well invested money where instead of a third less because you paid taxes and then put the remainder into savings, Instead, that full amount is sitting in there growing. And if you can do a Roth IRA combined with that, which is beyond what we're going to talk about today, then you put in after-tax income. It can also grow that way. But that, again, is beyond where we're going to get today. So take a look at the solo 401k as well as the SEP-IRA. And those are two tools that can really help you put away tons of money. The other thing that you can do is you can put a lot of money into benefits. And for this, you need to sit down with a competent CPA who specializes in small business, who understands small business retirement plans, and you can basically put together a custom retirement plan for you and your family. Often I see people doing this when they have maybe a child with a lot of medical needs where money needs to be put aside, or you have your own medical needs, or your spouse has your own medical needs, where you're putting away money and like healthcare savings accounts, things like that, that's pre-tax money that can be then used to take care of medical expenses, which otherwise you wouldn't be able to fully deduct or maybe deduct at all. Anyway, you can customize a plan so that you're putting money into benefits pre-tax. So essentially, instead of paying tax on that money, you're putting aside into benefits that you need and you'd have to pay for anyway. And this can be a really great strategy if you want to put a lot of your money into benefits. And I would say that generally speaking, that's your big benefit here with retirement plans and with reducing taxable income with a side business, much more flexibility. So this is Attorney Bob Diamond. Hopefully this is useful. If you like this advice, want to hear more like it, subscribe to this channel, like it. If you have questions, put them down below. I'll get to all the ones that I can. We go through the questions constantly. I answer all the ones that I can. So hopefully I'll be answering your question. Just put it down below so that I can answer it. So Bob Diamond, over and out for now.